Well, hello everybody. It's been a while since I've done a video, so I just wanted to think it's a good time to get back to making a few videos about my thoughts on the state of the market. I know there's been a lot of talk. I've been spending a lot of time doing research on the euro-dollar system, what the real impacts of the Federal Reserve is going to have on the markets and on the economy, liquidity, just to really understand things a lot better. So I just want to give you my thoughts and a lot of that research I've been doing, what I think is going on here. But first, what I wanted to show is the dollar index. I think a lot of people have been seeing the price of the dollar really spiking very strongly here, and then it's starting to cool off. So the question on a lot of people's minds is, and especially if you live not in the United States, you live in other countries where the strong dollar is really affecting you. Is this finally the top on the dollar, or could it possibly go higher? Well, we're going to talk about that, what that means for the equities markets and what that means for Bitcoin. But first, my usual disclaimer, I'm not a licensed financial advisor, so please, if you end up just blindly trading based on things I discussed today, you're going to end up losing all of your money and living in a van down by the river. So please take some time to do some research and consider the impacts of your decisions on your investments, your portfolio, and how you need to structure things. And back to my thoughts on the dollar. I've got a target here. The dollar's on an uptrend, and so there's an old saying, obviously the trend is your friend. So we don't fight the trend until the trend changes. And so the trend is starting to change. You can see the series of local higher highs and higher lows here. Lower highs and lower lows, I should say, rather. So you can see that trend starting to form. But in the context of the larger move, it's still definitely an uptrend. And how I gauge uptrends, again, is I use my moving averages, where we're at versus the moving averages. I'm going to throw the 200 on here to kind of give us the tiebreaker. So the 200-day moving average, that's my general sentiment momentum indicator. It's definitely in an uptrend, right? The 100 days in an uptrend, the 50 days in an uptrend. This last daily candle put us back below the 50-day and back below the 20-day. Obviously, the longer the moving averages, the more weight they get. So in the very short term, we're below the 20-day and now below the 50-day. So if you're really short-term, low time frame, my target is, I put that little star on there. I posted this in my Discord channel, so I put that star on there just to kind of very clearly show where my target is on the short time frame. So if I was low time frame trading this, I'd be looking for a move back up into resistance and then back down to that target of about 109.60, which is exactly where I called for that low right there in my Discord channel, and sure enough, it bounced off of that. I'm looking for a retest of that level, maybe slightly lower, finish this kind of a little bit of a local downtrend. You can see, though, it kind of forms a bit of a bull flag. So, but what is the impact of this? I do think that we are going to find support given the incredible hawkishness of Fed Chairman Powell in the last meeting. The interest rates that we're seeing going from a prolonged period of 0% interest rate in the high debt environment that we're in to going to straight basically to 4% in a few months, and then potentially going to 5% next year. Looks like the terminal rate, everybody's talking about the terminal rate now, could be up to 5%. So currently we're just under 4%, and it looks like we're going to at least 5% next year, which going from 0 to 5% after having been at 0% this long is astounding. So my expectation is that we're going to consolidate on this support. You can see this long-term trend line. You see the 100-day moving average. I would expect that we consolidate here and then break to the upside, just based on that incredible hawkishness. Now, what is that impact on the markets? I wanted to show you this. I thought this was astounding. I posted this on Twitter. The orange is the Bitcoin chart that everybody's really familiar with, the Bitcoin bull run starting in 2020 through early 2021, and then our summer correction after China banned Bitcoin, and then the ultimate top that was put in, and then the bear market. What's behind it is the QQQ over SPX. So this is the ratio, the relationship of QQQ to SPX, and it's nearly an identical chart with less of a drawdown in the summer middle there. But it's been a kind of a Wyckoff distribution pattern over here, and a very similar peak over here, and then an extremely similar sell-off. It doesn't mean a whole lot other than what I was tracking was this trend line right here. When that trend line broke, that's where we entered some pretty aggressive short positions on QQQ, and sure enough, those have worked out. We've been taking profit. We're looking for some consolidation sideways here. Here's my thoughts on the broader market. So the SPX is definitely the benchmark equities market. And what I noticed when I'm looking back at past, I'm not following these fractals per se, right? This is the 2000 sell-off. This is the 2008 sell-off in light blue and dark blue. So I've shaded those on here. What I want to do is just kind of monitor the behavior of the market. And you can see there's a lot of hope as the market starts to sell off. So this is the light blue. If you look at 2000, right, we put in a high, sold off, and we bounced back nearly to that same high and then sold off again. A lot of Bitcoiners will be familiar with this type of price action as well. This peak and then some minor peaks and then a big sell-off. 2008 was more of a consistent drawdown until we reached a snapping point. But both 2000 and 2008 had this period of where the market had been selling off, and there was a lot of bear market rallies, a lot of people trying to fight the trend and really try to buy these dips. And then what happened was we had this ascending wedge structure. In 2000, an ascending wedge, it's harder to see. Let me pull this chart up over here, and I'll take a clear ascending wedge pattern on 2000 and 2008. And then we had a very similar structure form in 2022. When those ascending wedge patterns broke, that was the biggest single impulse to the downside in both of these. So I'm looking to see if something similar plays out here. Again, I wouldn't expect us to follow any sort of fractal per se, but behavior is probably going to be very similar, right? Where you have this, there's a lot of headwinds in the market. A lot of people have been bullish for all these years. And so as the market starts to turn over, a lot of market participants are trying to still buy the dip as they have been doing. And then you get this after a period of time, there's like a capitulation event that finally occurs, and it ends in this ascending wedge at the weakness here. It just can't quite get going. And it only comes back up to prior resistance. So you can see here, I'm going to pull this out a little further. 2008, I want to see just the behavior, not necessarily trying to follow the fractal. But you look at the behavior of how this happened, right? So there's a big sell-off, people trying to buy the dip, big bear market rally. And then a big sell-off took out these lows. And then again, trying to buy. But this ascending wedge just comes back into pretty historic resistance. You can see that if I drew that right there, you can see how that resistance played out. And then the capitulation event happens. Something similar happens in 2000. If I draw this over here, and I can go back on the same thing, gradual sell-off, bulls trying to buy the dip, all these liquidation events. This big sell-off here and a rally. And then when that rally fades, then the bigger sell-off happens. Now, so do we see something similar where you have this constant bouncing, these bear market rallies, and then this ascending wedge structure, resistance, and all of these came into resistance about the same moving averages too, which is interesting. So they came in about the 100-day moving average where it found resistance, and then it really rolled over really hard after getting rejected. So I'm going to show you the kind of the structure of this market. This is what I'm seeing. So I'm seeing obviously these bear market rallies. This one tried to take out the moving averages. Good fake out here, good bull trap, got back above all the moving averages. Then the next big leg happened. Bounce close to the 50, down, made a new low. And then this bounce takes us all the way exactly to the 200-day moving average, and then we get our next impulse down move. And now this move is bouncing right back to the 100. So my expectation is we ping pong down here, make a new low, maybe a significant new low, bounce about the 50, and then start to put in our bottom formation. Kind of what I'm expecting to see. And it makes sense given the timing of actions by the Federal Reserve as the market starts to really price in that 5% terminal rate next year. That's really going to do a number on the economy given the debt load, right? There's a lot of businesses. I was reading some reports that, there's a high number of small businesses that can't pay their rent this month or, in the past couple of months. They haven't been able to pay they're not able to service their rent right now. So the real estate market, small businesses, they're all hurting quite a bit right now. And so this is going to have an impact on the market. Now, on the other side of all this, what I found very interesting is that Bitcoin has retaken the 100-day moving average. And so this is, generally speaking, when you get your big sell-off in Bitcoin, that similar kind of behavior. You look at how Bitcoin sold off, bounced almost to 50. We got our bounce exactly to the 200. What I find so interesting is that these bear market rallies love to come back to the 200-day moving average. It happened in prior bear markets. on crypto. It happened in equities markets, and it's happening now. But then when the big drop happens, right? So the big drop is really from the time you test the 200 down to the eventual bottom. When the big drop happens, when all these moving averages coil up, when the 100-day gets retaken, it's a pretty good indication that you have the bottom is in the rearview mirror. It doesn't mean that you're going to go on a big bull run. What happened last time, I posted this on Twitter. Let me go find my Twitter post here. We are here. So I posted this chart. This is my BLX chart, right? So back, I guess this was in August. And I said, look, keep an eye out for the 5th of November because that's typically the bear market bottom. I've been hypothesizing for a while that the bear market bottom could be slid quite a bit closer because really the bull market peak was somewhere in between these two peaks, right? So we had these two rolling tops. And so really our peak fervor was somewhere back over here. And we happened part of that. So about if you back up 517 days that last cycle, it was 539 days here. So if you back up roughly 500 days, you could be that's kind of the peak of the bear market in these last couple of bear markets. So again, about 500 days back, somewhere in there, you're going to find that flat portion where the market's just totally despondent. It's not really selling off. It's not going up. It's just really moving sideways. And that's kind of where I think we are and have been. And we may start a bear market rally here pretty soon. But obviously there's a lot of headwinds. So with that timing in mind, I look at the structure of those moving averages again, and I kind of am thinking that we're about here, right? So we're retaking the 100-day moving average. What I marked as UR here is the first daily close back above the 100-day, not 200-day, the 100-day moving average. And, again, here in 2019, it popped a little bit, and then it went flat for a few months, and then it broke to the upside, right? And then you had your big bear market rally. So I could see us doing something very similar. Retake the 100-day moving average, and against the headwinds of the broad market weakness and maybe a market sell-off, maybe Bitcoin simply doesn't go up. It just goes either flat or slightly down. That would be fantastic, right? Get relative strength. So I could see something very similar playing out. Again, maybe Bitcoin makes a more significant dip with the broader markets, but roughly speaking, I think we're in the middle of this kind of despondent period where people have pretty much checked out. And it's going to consolidate a little bit more, but we're now getting to the other side. We're getting to the other side of these moving averages, which is a very different picture than constantly hitting resistance and selling off. Now we've potentially broken through. We'll see how many days we can hold the 100-day moving average. But if we can get back above all of these moving averages, other than the 200, and turn those into support, and then we can form support. Obviously, horizontal support's more important than exactly where the moving average is that day. The moving average just really tells us the momentum. But if we can form some support, kind of like you saw here, put in 2019, it really we had a floor price and then that whole trading range. And then what happened was it broke back above the 100, and that price traded above on the top side of that trading range, basically. So there's a range that was put in early on, and then the price stayed in the top half of that trading range. So if we can do something like that, where price stays between 20, let's go to our dynamic chart here. You can see kind of the trading range that we put in. I'm going to go put in another yellow bottom here for these. My yellow lines in my chart are potential liquidation areas, right? So these are areas that the market's probably going to want to hunt out to try to liquidate. So that's your range, right? So the very bottom of this was 17,000. Top of this range is 25,000. That rejection, the first rejection at the 100-day moving average we had back in August was at 25, right around 25,000. All right, so if we can range between, maybe come back up to the 200-day moving average on this bullish move, hit 24 to 25,000, and then instead of retesting these lows, if we can stay back above the top half of this, stay above 20, we'll call it 21,000, but in that 20,000 to 25,000 range, and kind of consolidate here, 22 to 21,000, very similar to 2019, that would be a really good indication that we are probably again on the back half of the bear market, and we're looking for our first bear market rally coming out of this. So that's what I'm looking for. I do think, again, broad market headwinds is going to keep us, compressed down here, very much like 2019, maybe for a different set of reasons. That's what I'd be looking for Bitcoin in the second half of this bear market. Well, I hope you found that update video useful. I want to encourage you guys also to join our Discord community. I want to share, there's a couple things I'm sharing on there that I don't share on Twitter. For example, my community asked me to start a demo account and show how my trades are playing out. So this account is a smaller account that I mirror my main trades in. And you can see here, since the time I started it about 2 months ago, because we've had some really good success in putting in shorts on this market, I've actually been able to double that account. But pretty much post, maybe not every single trade I take, but I post, generally speaking, what I'm doing, what I'm seeing, very actively on our Discord server. So you can find the link to the Discord in the video description. So feel free to join us there, and I'll catch you next time.